Hi. So today's question, we want to know what is the difference between having $100,000 and investing them either in the market or buying real estate. Buying real estate in this case means buying around 300K worth of an apartment or a condo. So what's the difference? If you take the money and invest it in the market, basically the S&P 500 or any equivalent of that in the US stock market, you're probably going to be looking at getting around 7 to 10% compounded annual growth rate on those. So the return is going to be around that, taking inflation into account over a 10 plus year period. So again, the idea here is that you put your money, you invest it in the market, you leave it, and you at least want to wait 10 years. The reason for that is because the market can definitely dip during this time, and you can have 20 to 30% crashes during this period, and you have to be okay to leave your money for a longer period of time in the markets. Now, it's advised to put your money in the markets slowly over chunks and not put it in one shot in case you do get bad timing in one of those big crashes, and you're going to basically have to buffer that loss and sit there until it recovers. If you're not comfortable with that, then probably you don't want to do it that way. Instead, every month, for example, you want to put a little bit of money until you have all of your cash deployed into the market. And after you do that, you want to continue to add slowly but surely into it so that you continue to grow it and you can take advantage of the ups and downs that happen over a long period of time. When it comes to real estate, if you have $100,000 to invest in real estate for a $300,000 house, condo, or apartment, or whatever it is, you're looking at closer to around 5 to 6% of rate of return over a long period of time. And so this is going to be also over 10 plus years. The main difference with real estate is that you are paying a mortgage and you may have some kind of rent coming back. The rent may or may not cover your mortgage, so you may still have to put in every month a little bit of money into the real estate, just like you would if you were to invest in the market. So real estate doesn't necessarily mean that you're going to be making returns over this period of time. You're probably going to realize most of your returns when you pay your mortgage down and the house becomes only paying you income, or when you sell the house later down the line in 5, 10 years, you're going to realize a gain, and then you should be able to make up for everything that you put in. So in a nutshell, what's the difference between the market and between real estate? The market is going to be a little bit less stable. You want to be able to ignore that and have a higher risk tolerance. Usually the market, you also want to go into it for a longer period of time. So if you're going into something when you're younger, it's fine. As you start to become older, you want to start to think about how you deploy your money into the market. When it goes to real estate, slightly safer. Even with the crashes that have happened, real estate always holds and seems to bounce back relatively quickly. But at the end of the day, you will get less returns if you do it for a longer period of time. So, in a nutshell, that would be the difference between having $100,000 and putting it in the market versus putting it in real estate. And if you have any other questions, please let me know.